Welcome back. Where are we in the market cycle? This is one thing that we've been asking on this channel. Altcoin Gordon asked this on X, showing the psychological chart of the markets with an overlaid picture of the Bitcoin chart. But what is important to understand is not only where we are in this cycle, but where the chart is in this cycle. Are we already at the top? Are we already in euphoria? Are we already in the downtrend? Well, there are a cohort of users and investors in the space, including potentially many of you right here on the channel, that believe this cycle is over and we are already potentially in the downtrend of the market. And that would indicate that the recent drop that we saw at the beginning of August is not the dip. It's just the beginning. And so in today's video, we're going to be exploring whether the dip is over or whether we're going straight up moving forward. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. We upload every single day to bring you the latest happening in the financial world. I bring to you guys videos, content, context, and charts to show you where the cycle is, where the cycle's going. And so far, we've been very accurate in the previous all-time record high in 2021, the cycle low in 2022, and probably where we are in the cycle right now. Meanwhile, Tom Lee, who is the biggest Ethereum bull on the block right now, is basically talking about how the market may not believe what the president is doing. He said if you look at political affiliation, 60% of professional stock investors did not vote for the president. They voted for someone else. And that means the stock market doesn't necessarily believe the agenda going on here with the presidential administration. Now, that doesn't mean that it's not going to flourish and help crypto. It just means that there's a lot of uncertainty in the market in the second half of 2025. A lot of uncertainty leading to, well-known whales and heavy crypto investors like Arthur Hayes selling over $13 million of his portfolio in many cryptos that he has been pumping and basically talking very positively about, especially from a price appreciation perspective, like Ethereum, like Athena, and even the PP coin there. But the bottom line here is, what is spooking Arthur Hayes? What am I seeing from the data and the Bitcoin halving tracker, the psychological charts? And what is Tom Lee talking about here? Well, that's what we're going to be getting into in today's video. And we're also going to show you some other tweets from other users and investors in the crypto space that believe that we are potentially already in the downtrend. But we're going to be starting right here with Tom Lee, talking about what the market believes and what the market thinks is going to occur. And remember, the market usually prices things in before they actually happen. But there's a lot of uncertainty here. And the uncertainty, while it may not affect crypto, right? The crypto industry, like, there could be news about, attacks around the world for war, and they would say, oh, well, this is very bullish for crypto. Then you hear about a war being tied up and finished, and they say, well, this is good for crypto. Like, everything cannot just be good for crypto. Like, we are going to hit bear markets. We're going to hit corrective phases. And if you really look at the Bitcoin price and the Bitcoin market, especially in 2025, we have effectively been going straight up for the last year. Now, this is not true with every single asset that we're going to be talking about, but with Bitcoin specifically, it has been going straight up. We have been in the bull market. We are at the 12 to 18 month time frame after the Bitcoin halving, which historically is the time frame that we're going to see the most volatility and the most uptrend in the market. And so this may indicate that we have a lot more to go to the upside, or this could indicate that the cycle is over. And so let's first listen to Tom Lee and see what he says. And then I'm going to show you some more data, and we'll get into the Arthur Hayes stuff to indicate where we are in the cycle. Because again, no matter how low we go, right? We can go down to 100,000, we can go down to 110,000, we go down to 80,000. It doesn't matter. No matter what price we go down to, the bulls are going to say it's the bottom. But the bulls are not the ones who are analyzing the market, objectively, looking at the market without the emotions involved. You and I, we are looking at this market like we want to capture the profit. We want to capture the upside without the risk of the upside, right? We want to minimize the risk, maximize the reward. And so a lot of us on this channel have been probably looking at kind of where we are in the cycle and kind of been moving our positions. That way, we're not caught up in the mania of these major moves to the upside or the downside, where people start to panic buy, panic sell, FOMO in, FOMO out. And then you get all that volatility, but it's all just pushed up on a puff of air. And that's why you usually hear about pump and dumps, right? Because the market goes parabolically up or in this banana zone very, very rapidly and then comes straight back down. And it takes years or potentially never actually recovers to that point. And so let's listen to what Tom Lee says about what is going on from a political standpoint with the markets, because this is very important because politics does tie in to the financial ecosystem at some points, even though this is not a political channel and the markets are not really political either. Let's listen to what Tom Lee says here. We'll play this on 1.25 speed and just get your headphones ready. Let's listen in.
I think every bounce since COVID has been a hated bounce, because if someone was personally realistic and introspective, they didn't believe we could recover from that initial COVID decline because the world economy shut down. And then when stocks tanked because Fed Chair Powell initiated the fastest rate hikes in history and stocks tanked in 2022, I know that every one of my institutional investors said, Tom, there's no way stocks can come back. Not every, but most, because they said the Fed is trying to engineer a recession. So those two rallies were very hated. This rally, because stocks tanked because of tariff Armageddon. And we have to keep in mind that if you look at political donations or political affiliations, 60% of professional stock investors voted for not President Trump. They voted for someone else. And that means that the stock market does not believe the Trump agenda. And that's why when stocks fell in April, and we talked about a waterfall decline, having symmetric bounces unless there's a recession, it was met with skepticism because the pushback was the Fed is not going to unleash liquidity, so there's no way you're going to get a V-shaped bounce. Well, we got a V-shaped bounce. In fact, that is consistent with history. And I think what makes people really hate these rallies is that since the end of 2019, economists have become very important voices in macro decisions for correct reasons. Economists help you decide how an economy behaves when you shut it down, or how you deal with inflation, or how you deal with tariffs. So they are obviously are important voices. But when economists start to tell you that you have a recession and therefore you shouldn't own stocks, keep in mind, economists have predicted like 13 of the last 3 recessions. So I think that has made this the most hated rally. And that's why, of course, once we broke to new highs, stocks have been levitating. I think
Now, a lot of what Tom Lee says is valid, and as you guys know on this channel, we've been following Tom Lee since the pandemic and since his calls, and he's been very, very accurate since. And while he is correct that, the market has been anticipating what the Federal Reserve is going to do in this cycle, and the Federal Reserve has been stating they're not going to do really anything. And yes, there is a lot of fear about this tariff situation and about where we are from a recessionary standpoint and an economic standpoint. But at the end of the day, the crypto market doesn't really care about all of that. And so there is a part that could play in here to push us much higher in the markets. I am just looking at everything. Arthur Hayes selling some of his crypto was definitely a moment for us to really reflect on, because it's not the indicator for the market, but it is an indicator. And the fact that Arthur Hayes is selling because he believes that the geo-macroeconomic conditions kind of potentially not being in the best spot, and the Federal Reserve not doing what we think they're going to do. They did not even give us indication that they're going to be cutting in September, and a lot of people in the market are already stating that that's what they're going to do. But again, if you look at the Bitcoin halving tracker, we are towards the end of the cycle. If you look at the psychological chart here, we are probably in the complacency or already in the euphoria phase of the market. Now, Axel Bitblaze on X with 127,000 followers, he says he's a low IQ idiot, according to his own profile. But anyway, he posted this longer thread, and we're going to be taking a look into some of the ideas and thought process around where the market is. He says July was euphoric. Bitcoin hit all-time highs. Ethereum bounced up 60%, and many altcoins pulled an easy 3 to 5x moves. But August is already flashing red warning signs across the board, as we have been talking about. He talked about jubilant July, and it played out perfectly. He said Bitcoin hit new all-time highs, Ethereum pumped, and crossed $3,500 while many altcoins pumped 3 to 5x. But now he's becoming a little bit more cautious. He said he's not long term bearish nor calling for a top, but we could see choppy markets similar to June. This could also be one opportunity to pick up your favorite altcoins before the next leg up. But let's start with the reasons. Now, by the way, I'm not saying whether these things are or are not going to happen, right? My job is to analyze what could potentially occur in the markets and then prepare for it, right? What is the risk reward on the bullish trade, and what is the risk reward on the bearish trade, and what is the risk reward on doing nothing? I mean, if we are going to have a bounce, that doesn't mean that we're continuing the bull run. It just means that we're in a bounce, right? Because as you exit a bull market, you have a lot of volatility. You can even see that on the psychological charts, right? After the euphoria phase, the market's still trying to reclaim those highs, even though it can't, because the weakening in the market, the weakening in the narrative, the weakening in the overall sentiment and money flows in the market. And this is what we have been seeing, right? I mean, if you look at the Bitcoin ETFs, I mean, billions and billions of dollars have been exiting the ETFs for Bitcoin. Meanwhile, last month, billions and billions were entering. And so does that mean that we're going into a corrective phase? Does this mean that Wall Street is offloading for a little bit? Or does this just a profit-taking standpoint? I don't know. We have to kind of wait for these things to play out. But remember, you're not going to know that we have hit the top of the market until after we've hit the top of the market. And so if you try to time the market top, you're never going to know when that is. Same thing with the bottom. You have to guesstimate, and you could be off by a few $1,000s or even tens of thousands of dollars now that we're talking about Bitcoin in this much higher valuations, right? Going back to his post, he says the TGA refill is the Treasury General account. In the past, he said he's talked about this, and this is the U.S. government's checking account at the Federal Reserve. He says right now the TGA balance is sitting at $420 billion, and the U.S. Treasury is planning to do a $500 billion refill. What's really important is that this $500 billion refill will happen by September. During the refill, the government sells T-bills or treasuries to investors, thus sucking liquidity away from the market. Pay attention, because this is important. It's also important with when we're thinking about, they're issuing these treasuries. At the same time, MicroStrategy is trying to raise debt, as well as many of these other Bitcoin treasury companies are trying to do that as well. And so are they going to go at all-time record highs to offer more debt to MicroStrategy, or are they going to do it in a more safe, stable investment like a treasury? Pretty sure you guys can answer that question yourself, right? The bulls for MicroStrategy will say one thing, but everybody else who's an investor knows the real reason. Anyway, it says this means that $500 billion in liquidity will be taken out from the market in 1 to 2 months, and this will definitely impact asset prices. He said we could see correction in equities market, and this will impact Bitcoin and altcoins too. And by the way, as we're making these videos and discussing all of this right now, the stock market is literally at all-time record highs, right? And they keep making new highs. We have the likes of, Apple sitting at over $3 trillion market cap. We can look at NVIDIA as well. And it's probably a very high market cap as well, $4.3 trillion, more than double the market cap of Bitcoin, which is a global asset and potentially the reserve currency in the future. And meanwhile, NVIDIA, which is a chip company, is worth double the entire global market cap of Bitcoin. And I think actually the entire market cap of crypto altogether. I mean, that's really crazy to think about. And so the stock market is at all-time highs right now and is seeing massive valuations, probably much higher valuations than we should be seeing, right? And so what does this mean? Well, if the stock market goes through a corrective phase, even for a month or two, crypto is going to follow. Now I'm going to show you a chart that's going to pretty much blow your mind in just a minute, though. Before we get there, let's continue with this tweet thread, and then we'll get back to that chart that I want to show you. And by the way, don't forget to give this video a free thumbs up. We upload every single day to bring you the latest happening in the financial world, try to give you guys a rounded, full macro picture of the market so that you can make good financial decisions. And so Axel Bitblaze said volatility controls fund buying. In the previous months, he told you that volatility controls are set to buy 100 billion in US equities this month, and it happened, which pushed the S&P and Nasdaq to new highs. But that buying is most likely over for now. He said, what does this mean for US equities? Well, sideways price action and maybe some dips as well. This will push Bitcoin and Ethereum down while other cryptos may experience free fall. And by the way, some of these cryptos are experiencing free fall as we speak. And I agree. At the end of the day, crypto and the stock markets are highly correlated, regardless of what anybody's telling you. And so, I personally called the top at around $110,000 right here on this channel in June and July. We've gone higher than that. People are like, Cryptoviser, you see, you're wrong. Ha 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 ha. And I'm like, a $5,000 difference is not that big of a difference. Even doubling, right, to a $200,000 would not be that big of a deal, especially when we can go down by 90% and potentially will, especially if we do hit those $200,000, $300,000 levels. And so, again, you're not going to know that you're at the top until you're at not the top anymore, right, when you've already come down a bit. And we already know that there's massive selling that has been going on, that is going on, and continues to go on, regardless of what the maximalists say, because otherwise, if there was no selling, the price would be much higher. That's why it's pretty unbelievable that we're at this stage in the cycle, right? We've already been in the bull run for over a year now, and there's still people saying, "Oh well, Bitcoin doesn't even move at all." And it's like, no, it is. It's just not moving in the direction that you want it to move. If we're sideways trading for half the year already, pretty much, right? And going up very slightly, think about the massive amounts of selling that is ongoing that the maximalists are just ignoring and not telling you about, right? Anyway, he said buyers' momentum is also fading. Remember in Q1 when Bitcoin and crypto didn't rally despite bullish news. Something similar is happening now. Companies are raising money. The SEC is calling the most altcoins that are not securities, saying they're not securities. And yet demand is fading, right? And so again, I personally believe this is a bull trap. It doesn't mean we're not going higher, but the higher we go, the more trapped in you're going to get, especially if you're buying at this stage. And there is going to be a lot of buying because there's going to be a lot of FOMO. Even if we dip, there's going to be FOMO selling, thinking it's the last dip. There's going to be a lot of buying on those dips. Then we're going to go higher. Then people are going to turn bullish again. But the thing is, we have to look at the strength or the weakness in the overall market. And again, not just look at the market, but also look at the cycle in the market. So that's where we have to look at the Bitcoin halving tracker. So we have to look at yearly flows and more. And we're going to get into some of that in just a few minutes here. But anyway, he said recently Coinbase Bitcoin Premium also turned negative after 3 months. LTHs also started distributing STHs in the past few weeks. I don't know what either of those, supply ratio, I don't even know what that means. Anyway, we'll continue on and skip that tweet because don't even know what that means. The Bitcoin Coinbase Premium, never even heard of that. Anyway, he said this is not a good sign for markets and it shows that bulls are losing momentum. They are. I mean, guys, just look at MicroStrategy. Like they're running out of debt products. Now they have 4 debt products. Each one is oh my God, this is the most amazing debt product in the world, which tells me they're going to create even more debt products, meaning if you're in their old debt products, they're going to come out with a better one, basically dump on you in that other one. And it's just this flywheel of debt, which is really not good. And it's pushing the market up on a puff of air. That's literally what it is. And so we're going to be coming back to this chart in just a second because you guys are going to want to see what I'm about to show you. But yeah, momentum is starting to slow down, right? I mean, how many times are we going to hear MicroStrategy say, well, we just bought 10,000 Bitcoin, and people cheer that on and say, wow, oh my God, we love it. It's like, first of all, the price is not moving. Second of all, you have one central point of failure for all of this Bitcoin, which is a huge risk to the entire crypto industry, the entire crypto ecosystem, and your personal money, right, in the market. But nobody seems to be worried about that because price is going up and MicroStrategy keeps buying, right? No, the risk is flipping. where the reward is going to become less than the risk. Because again, we can go to $300,000, but are you going to be able to sell your crypto at that level? The likelihood is no, because there's probably already order books and conditional orders and conditional orders already on the books. And the billionaires are going to get out well before you're able to. And so there may not be actually liquidity at those higher levels. And people are going to say, but Cryptoviser, MicroStrategy will keep buying until they don't. Anyway, on a macro level, the FOMC, or the Federal Reserve meeting, happened, and when it went very hawkish, more hawkish than expected, he says. Powell simply said the Federal Reserve has made no decisions about a September rate cut. This pushed the probability of no rate cut to 56% for September. And as I've been explaining, right, there's a lot of people in the market that are not believing what the Federal Reserve is saying. They may cut in September. That is definitely possible. But at the end of the day, like, they usually tell us what they're going to do before they're going to do it. And they didn't tell us they were thinking about cutting in September. They kept saying data, data, data. And the data doesn't really look that good. And there's a lot of, the unemployment level is basically almost 4%, or a little bit over 4%, which is very in line with where we were right before the pandemic shutdown. And so we're getting closer to that level where the Federal Reserve will have to cut, but it may not be September. And so what happens in September, on September 17th, if the Federal Reserve does not cut and the market until September 17th keeps going higher? What do you think is going to happen after that? Like I said, a puff of air is going to just disappear and the market is going to crater. Now, this is just a theory and a thesis. I don't know that this is actually going to happen, but I want to direct your attention to the MicroStrategy chart for just a quick second, because you guys know, if you've been watching my videos, my thesis on charting. Now, generally, I don't like using charts as my only indicator for the markets, but I do use it as a piece of an indicator. And more importantly, understanding that typically, based on historical data from Bitcoin and crypto in general, from the top of the market to the bottom of the market is about 1 year, almost to the day. And so basically a way to look at the market and look for potential action in the market is to look at the inverse of the yearly chart. And so we peaked in the, looks like the middle or end of November in 2024, right? That was the top of the market for MicroStrategy, and also top of the market for a lot of cryptos, generally speaking, right? This was in 2024. So if we go and we say, you know what, this cycle is different, we are not topping out in 2025. We topped out in 2024. The bull market started in 2023. We are on cycle. The Bitcoin halving tracker is kind of in line with where we're supposed to be in the cycle, regardless if people think we should be higher. It doesn't matter what people think. It matters what is and what the historical data show us, the law of diminishing returns. And so if we take all of that together, and we say, you know what, from the top of the market, which was last year in November, to the bottom of the market, which will be this year in November, if it follows this. Now, keep in mind, there is also a thesis that because we're still in a bull market, this is actually going to be where the top is, and we're going to continue this trend higher. Because if you look at what happened in 2020 and 2021, the market went higher in the second half of the year. And then in 2022, the market started cratering at that time when they peaked. So there's potential that we're going to actually see 2025 be the second run-up and the actual finale to the bull market. There is a thesis, and it is possible that we're going to do that. And that would set us up for 2026 at the end of the year to be the bottom of the market. But there's also a thesis that 2024 was the top. Okay, maybe not for Bitcoin, but I mean, Bitcoin pretty much, let's look at the Bitcoin chart for the 1 year. You can see, I mean, in November of 2024, we were pretty much at $100,000. So we're within 20% range from where we were. So there is a potential to say, like, yeah, we kind of already topped out. But either way, one of the things to look at this year-to-year kind of movement is just look at this MicroStrategy chart, okay? What it shows is that last year in August and September, we were sideways trading. And then at the beginning of September, MicroStrategy started to take off and went on a mega uptrend from September into the end of November. Okay, so a little bit more than 2 months. Now, if we extrapolate this and reverse it or inverse it, what that would tell me is that MicroStrategy is going to sideways trade until the beginning of September, and then we are going into crater mode, downtrend mode, into the end of November, and that would be the bottom 1 year after the top. Now, again, this is just a theory and a thesis based on that 1 year hypothesis that we have proven is true based on previous cycles. From 2021 top to 2022 bottom was exactly 1 year to the day. To the day. And so, if we think about the rest of 2025, the catalyst for the rest of 2025, we have the Federal Reserve. Are they going to cut or not? Now, they can pull the rug and say we're not cutting in September, and the likelihood MicroStrategy drops because of that, right? So inverse this upward trend is very high. And so if we did this kind of jump and then you inverse it, right? So think about this is going lower and this is the top. This is a long way to drop. This is a big drop, and this drop lasts for 2 months. And if you think about MicroStrategy over the last year, 2025 has basically had no drops in MicroStrategy besides the beginning of the year. The beginning of the year, the drop was about 25 to 40%, right? So a 40% drop at the beginning of the year, and it's been uptrending ever since. There is potential to say that we're going to continue the uptrend, but the thing is, MicroStrategy's play, I think, is over, right? It's kind of like the exhaustion in the Bitcoin narrative that Axel was talking about here in his tweet. He's showing the bulls are losing momentum. And what we've been covering is that MicroStrategy specifically has been losing momentum for a little bit of time now. You can see like the uptrend is basically over. We've basically been sideways trading since the top of the market last year. And that's not good because they keep buying, they keep creating more debt products, they keep trying to create more value. And meanwhile, they're not able to do it just from their own stock price because they are already trading at a premium to the NAV. They were selling shares in the open market. Now they're not going to do that right now. And the bulls are like, wow, MicroStrategy said they're not going to buy anymore. It's like, guys, or they're not going to sell anymore in the open market. And they're celebrating that, but it's like, but MicroStrategy doesn't really have any other business model or business line. I mean, they just reported their earnings, which now is the new updated accounting that can, basically they're able to say that Bitcoin they're acquiring is income, but it's not really income, and the market knows that. So anyway, the long story short of what I'm talking about here is that there is no narrative that I see besides Bitcoin going up substantially where the MicroStrategy price can keep moving higher, right? They have been trying to defend this $400 level for months, and they cannot get back above it. Once we came back down below 400, I was like, yeah, it's over. Because we came below 400 after their earnings report where they stated they made, I mean, you can see right here. Their revenue was $114 million, their cash flow, right? How much money they actually make. But meanwhile, their income is $10 billion, but they only made $114 million. And so the market sniffed it out and said, this is just accounting gibberish. It's not real. They didn't really make $32 per share. They're just accounting for the Bitcoin. And I think that now that they've implemented this, the market has been pricing that in. The market has been pricing in, S&P 500 inclusion or in Dow Jones inclusion. And the MicroStrategy bulls keep saying, it's going to happen. Now it's going to happen. They have to be included. It's like, no, they don't. Wall Street is not stupid. Wall Street is not like waking up one day and say, wow, MicroStrategy made $10 billion. No, they know MicroStrategy didn't make $10 billion, right? They understand that. Anyway, I don't know why it's saying MicroStrategy market cap is only $2.5 billion. It's definitely not $2.5 billion. It's something like $100 billion. So This is not accurate. But either way, if we look at that 1 year chart, this is an indicator for me, right? Because the likelihoods that we're going to see MicroStrategy going up again in a parabolic way, I think is significantly lower chances as us dropping this much, right? Again, pretend this is upside down. And this is where we're starting, and that's where we're dropping to. That's a pretty big drop. And I think that that is more likely to occur, even though we may have some volatility, even though we may go higher, even though we may hit all-time record highs in crypto, in MicroStrategy, in other assets, we may. But again, what is the narrative that's going to keep MicroStrategy flowing? I don't think that there is one. I don't think that they have a leg to stand on, and they cannot defend this $400 price. And so we hit the $400 price last year. We hit it this year multiple times. Every single time they kept selling into the $400 level. And now that Bitcoin has gone up to all-time record highs and MicroStrategy hit these $400 levels again, even with no fear of selling them selling more shares, the price is dropping. And I believe that it's because the MicroStrategy trade is over. And that means that their ability to raise money is going to slow down, especially, again, if the Treasury is refilling their general account and they're going to be selling T-bills, which they are, onto the market. You're going to buy MicroStrategy debt or T-bills. Most smart investors would choose T-bills at this point in the cycle. And so these, again, these are not all encompassing, but these are indicators. The DeFi villain on X said the bottom on Bitcoin is quite ugly. I'm not sure I trust it. It also happened on a Saturday, which is quite rare for a bottom. And he showed the Tether and Bitcoin price. And again, this drop was only from 117, 118,000 to 112,000. But again, we came down that quickly because there's nothing else holding Bitcoin up, right? All of the major buying has been getting done for the last year and a half since the Bitcoin ETFs have started. Hundreds of billions of dollars have entered the Bitcoin ETFs. So people who say, well, Wall Street is joining the party, it's like, no, they joined. Oh, well, Wall Street is buying. No, they bought. Oh, Wall Street companies are going to start putting more and more Bitcoin in their balance sheet. No, they did. They're not going to. They have already done it. And the price of Bitcoin hasn't moved. And so once you start that downtrend, it's very hard to recover from it. And by the way, this is the second time now that we've had a tiny dip where the market said, oh, that was the dip. That was capitulation. And I was like, that's not capitulation. And again, going back to 2022, 2021, when people said that we had capitulation, I was like, there's no way. There's no way. The fear and greed index is sideways, meaning in the middle. And people being able to call like a capitulation that easily, like you will know capitulation occurs. You will know a bottom is formed when nobody's bullish anymore. Nobody's posting this nonsense. Like, well, Cryptoviser, it doesn't really matter if we're at the end of the cycle or not because Bitcoin is going to keep going up because MicroStrategy keeps buying because they keep taking out more debt. And it's like, okay, do you hold XRP? Yeah, of course. XRP is going up too. And it's like, can you talk to me about the tokenomics of XRP and why Ripple is selling their coins? Cryptoviser, you're just a bear. And it's like, no, they're selling their coins. So how is the price going to go up? Well, Cryptoviser, you're just an XRP hater. It's like, okay, I'm talking about the data, right? And so that is when you know capitulate. You will know when capitulation hits because people aren't saying, oh, that was the bottom. They're going to say, oh my God, we're going lower. Should I sell now? And you're going to start to see FOMO selling. Until we see that, we're not at the bottom. And again, this is why I believe this little drop in the market cannot be the bottom when fear and greed index is still in the middle. We have the potential, especially looking at the MicroStrategy 1 year inverse chart. And I just look at this and I'm like, if MicroStrategy doesn't go higher in this time frame, I mean, it could go sideways. That's possible. But if it doesn't go higher in this magnitude, which there is no thesis. I have run through every possibility. MicroStrategy keeps buying. They keep getting more debt. They keep buying. Bitcoin price goes to 300,000. There is almost no possibility, right, that MicroStrategy is going to be able to go up this high in this amount of time. Now, it's possible. I'm not saying it's not possible. I'm saying that the possibility of it occurring, to me, in my probabilistic statistical analysis, is like maybe 10%. Now, sideways trading could be another, 50%. I don't know. But to me, it seems, if we think, is MicroStrategy going to follow this path higher, or are we most likely going to see the inverse? I'm looking at it and saying, probably going to see the inverse. We're probably going to see MicroStrategy coming down. It's going to happen at some point. Whether it happens now, whether it happens next year or the year after that, it has to come down because it's already trading at a premium to the NAV, number one. Number two, the Bitcoin price needs to come down. Number three, the stock prices need to come down, right? Again, Bitcoin, the entire crypto market, let's see, is 3.75 trillion. NVIDIA is more than the entire global crypto market. It's way, way, way overvalued, right? Maybe crypto is also undervalued, so they can both correct. But right now they're correlated. And so the likelihood that we see NVIDIA come down is high. Will that bring down the rest of crypto? Likely. Will that take down Bitcoin? Probably. And then so what happens if there's massive drops in the market, including Bitcoin, including all of these other things? Well, MicroStrategy is already at a premium. So that premium is going to compress, meaning the price is going to come down. Plus the macro market, the price comes down. This drop, this inverse play here is a very, very likely and high possibility. But let me explain why this could be an extremely bullish thing if this does occur. Number one, it will be the correction, it will be the dip, and it will be the flush of the premium. That's going to be good for MicroStrategy. It's also going to be good for the rest of crypto as well. But if we do that, okay, and it follows this kind of trend that we're seeing of the Federal Reserve, in September, if they don't cut, or it seems like they're not going to cut, we could start dropping. It looks like we're going up on this chart, but pretend it's going the opposite direction, okay? We could start dropping. Then we have another Federal Reserve meeting, I think in end of October, early November. What if they don't drop rates then? We keep dipping. And we could keep dipping until November, December. And by the way, a lot of charts look like this on the inverse. I think I was looking at, Riot or Marathon. It may be Marathon Digital. But no, look at Riot Platforms. Same thing as last year. September, it bottomed, and November, it topped. So if we're following this, it's possible that we're going to go back to these levels. But what if we have the inverse, right? What if the macro conditions continue to deteriorate into the end of 2024? This could drop precipitously into the November timeframe. Then in November, December, maybe we'll get a major package deal from the Congress. Maybe we'll get a new spending bill. Maybe there will be some other macroeconomic event that occurs that we just can't foresee right now. Maybe the Federal Reserve will be changed. Maybe they'll start indicating that they are going to be cutting the rates. And so we could sideways trade again until, the beginning of 2025. And then that's the floor. Start moving higher into the middle of 2025, and then potentially another dip into the middle of 2025, and then potentially a reversal again and back higher. Now, again, I'm just giving you guys some different thesis of this. You can see here Marathon actually held pretty much sideways traded until November. But you can see in November, that's really where the market all across the board peaked. And so there is the potential that was the top. Look at this is Marathon Digital, one of the largest Bitcoin mining companies, and by the way, one of the largest privately held Bitcoin treasury companies. They hold something like 50,000 Bitcoin. Look at their stock price, sideways. Literally no no actual upward movement all of 2025. And so that kind of leads us into the fact that we're already in a bear market. And so if we're in a bear market, are we at the bottom just yet? Or do we have more to fall? And if we have more to fall, maybe that's going to put, again, Marathon, November as being the bottom. This is a potential. And there's going to be people say, Cryptoviser, there's no way that the end of the year is going to be the bottom of the market. Well, why not? It was in 2018. It was in 2022. It may be now. It may actually be now. And so, Fabio from the Internet Computer Ecosystem said, is the Bitcoin top in for this cycle? He said, as suggested by a subscriber. In his next video, he's going to analyze the global M2 money supply versus Bitcoin versus the inverse Dixie. And that might be suggesting a correction for Bitcoin and altcoins. Bitcoin perfectly reacted to the 50% Fibonacci extension level at $120,000, but the ideal target for Bitcoin could be much higher at $166,000. The Bitcoin dominance is still elevated and altcoins are heavily bleeding against Bitcoin. What comes next? Now, I'm seeing a lot of conversation about this M2 money supply, which is the yellow line here. While liquidity is somewhat of an indicator, I don't know that it fully is. And I also believe that sometimes it lags a little bit or it's ahead of the game. I mean, again, if this is the M2 money, can you guys see this? Yeah, you can see up here. The M2 money supply right here for September and November, it's basically where Bitcoin price is. And the Bitcoin price maybe just is a little bit more compressed because maybe Bitcoin is figuring these things out as well. But another indicator is like there's already another YouTuber in the previous cycle said we have an extended cycle. June 2022 is going to be the top of the market. Well, what was June 2022? The bottom of the market. Now that same influencer, not here, not Fabio, but that other influencer is now stating that, again, Bitcoin dominance levels show that it's very bullish for Bitcoin and all of this, but isn't showing the Bitcoin halving tracker, isn't showing that the fear and greed index is directly in the middle, isn't showing that basically the market topped out last year. Like, I do think that we are, for most altcoins, not in a bull market. They were in a bull market, but most altcoins have come down, substantial. Some are down 90% since last year. And people are still, oh no, we haven't even started the bull run. It's like, what? No, the bull run was just before. And by the way, if you follow my videos in the bear market, this has been my thesis that this cycle, everything's going to be happening before the previous cycle because everyone's going to be anticipating everything to follow exactly the same as the previous cycle. And that's not how the markets work. They're going to do the opposite of what you think. And meanwhile, a Bitcoin Maxi Yudi posted this and said, quite frankly, I don't know anybody who would want to buy a chart that looks like this. And what chart is this? This is the Ethereum chart. This is exactly how the Ethereum chart looks. And I have another video. I don't know if it came out already by the time you're watching this video or not, but it's basically called the quadruple top. And if you look at the macro level and the macro charts on Ethereum, just from this cycle, top, 4 tops. And if you zoom it out to the previous cycle, top, that's quadruple again on a macro scale as well. And so there is a clear indication here that we potentially are at the end stages of the bull cycle. It doesn't mean that we're not going higher. It just means we may not be going much higher for much longer. And even though we have all of these treasury companies buying and all of this, this is bullish. But again, a lot of these sales are being done through private sales. It's the same thing we're talking about with XRP. If XRP gets an ETF approved, this is not bullish for your coins because the Wall Street is going to be buying directly from Ripple. And Ripple is going to continue to flood the market with their XRP, which they continue to sell 200 million a month or 300 million a month. And so how many of the bulls understand these tokenomics of XRP? How many of the bulls truly understand the tokenomics of Bitcoin? The sheer volume of debt that is being raised to purchase Bitcoin over the last year and a half is astronomical. And for people to think that it's going to get even more now, when the Treasury is trying to refill their coffers, and so that Bitcoin can, continue to sideways trade, I just think that the trade is over. And I'm not saying forever, but the fact that we haven't had any major corrective phase for Bitcoin is very indicative of what the market is pricing in. And the market and the players like Arthur Hayes in the market are pricing in a major dip. But are you? We here on this channel do think that we're due for a dip. This MicroStrategy inverse yearly chart looks very scary if we do follow the inverse play here. But if you're hedged appropriately, this if this is a downtrend to the like of maybe 80%, you can still make a lot of money here in the market, whether the market goes higher or the market goes lower. The bulls are going to make money. The bears are going to make money. But are you going to make money? Hopefully you are. Don't forget to give this video a free thumbs up. Hit that subscribe button. That way you never miss a new video. And I'll see you on the next video. Let me know your thoughts down below about this conversation. And I'll see you guys on the next video. Invest responsibly. Do your own research. And is the dip over? Crypto on.